Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 6:30 in New York on Tuesday, 8th day of October 2024, and this is the evening report for gold and silver. Today's price declines in both gold and silver clearly convey a high probability that both precious metals have entered a corrective period. Gold, basis the most active December contract, lost $21.30, taking December gold to $2,640.60. Overseas, gold is slightly lower. Spot gold also declined in similar manner, giving up $21.30, taking a troy ounce of spot gold to $2,621.60. Silver declined by 3.29%, just over a dollar, taking December silver to $30.89. Lastly, the dollar was muted once again today, declining by 0.05%, taking the index to 102.483. Traders, as I've been talking about all week, it was highly likely that gold would develop into a full-blown correction. If that occurred, there were two particular price points that I deemed were appropriate levels to look at for potential support. Today, the intraday low came in at roughly $2,620 and gold closed at $2,641. But the number I have been speaking about all week and last week was the 23.6% retracement at $2,635. We have definitely touched upon that price point. This is an area we want to look, but absolutely not act until we have a defined key reversal or pivot. We want to see that V formation that occurs when a market moves down, finds support, and begins to move back up. To make a decision prior to that is acting on hope rather than technical evidence confirming that a key reversal or a pivot has taken place. While using that technique, you're never buying the bottom or selling the top, but you are much more likely to be correct about entering the position and the direction it's going rather than nailing the bottom price or the top price, which frankly is something that is close to impossible to do because you need that technical confirmation before acting. When we look at our master chart that we have been using that has our latest Elliott wave count, a series of Fibonacci retracements as well as extensions, we can absolutely see after hitting the all-time record high, we have had a sizable correction. We are at the first point to look for potential support, but by no means act upon it unless we see a pivot. If we see gold continue to track lower and on a closing basis go below 2635, the most likely area will begin at 2614. It has to do with this series of tops here and the Fibonacci-based 38.2% retracement just below $2,600. Regardless of where gold finds support, whether we're close to it or have a ways to go, I am still of the conviction that once the correction runs its course, we will have a last rally, the primary fifth wave, that should be approximately equal in terms of the price move of what we have labeled as wave one, which was about a $130 rally. If gold finds support at $2,590, we would expect to add $130 to that price point, which would take gold to a new all-time record high at $2,730. If current pricing turns out to be the price point that gold finds technical support, a $130 move from there would take gold prices to $2,870. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.